If you happen to check the markets yesterday, you witnessed one of those sudden explosive moves that just, it stops traders in their tracks.
Oh, yeah.
We are talking about Cemtrex Inc., ticker CETX, which didn't just move, it went vertical. It delivered a truly parabolic session.
It really was a decisive and a very high volume session. It felt like a significant inflection point. We're currently looking at a detailed analysis report that tracked the stock, and it surged over 41% in that single day. It closed right at the doorstep of that big psychological level, $3, selling at $2.98.
And the volume was huge.
The volume was massive. I mean, that's the key indicator here. It confirms that the daily high of $3.38 was tested with real conviction.
That conviction is exactly what we need to unpack. I mean, when a microcap stock moves like this, the immediate question from you, our listener, is always the same thing.
Is it real?
Exactly. Is this simply a fleeting one-day perp driven by, I don't know, short-term excitement? Or is the market finally recognizing something fundamental, something that signals the start of a massive recovery rally back towards, say, $5 or even higher? That's our mission today.
Precisely. And this deep dive, it's focusing exclusively on that analysis report we mentioned, which argues very strongly that this move is different from your typical speculative burst.
Okay.
It claims the underlying numbers, and this sudden confluence of positive fundamental catalysts suggests the stock has been suffering from a pretty profound valuation error. They argue it's still, even after the surge, incredibly undervalued.
So we need to look at the verifiable hard data that forced this breakout.
That's it.
Okay, let's unpack this. The analysis report is, it's pretty adamant that this is not some kind of meme stock rally, but it's a reaction to actual financial results that hit the wires. So let's forget the chart for just a minute. What specific results were released that laid the groundwork for all this excitement?
It really all boils down to their full fiscal year 2025 results, and specifically two achievements that the market had been desperate to see confirmed.
Which were?
Sustained double-digit growth and, more critically, an official return to profitability. I mean, the company finally delivered proof of a viable operational turnaround.
Okay, let's get granular. Give me the numbers that acted as the flashpoint here.
So on the top line, the company delivered $76.5 million in total revenue. That represents a very healthy 14% year-over-year increase.
Which is solid.
It's very solid. It confirms the underlying business is growing faster than the economy as a whole, but that's only half the story.
Right.
Growing revenue is great, but the real game changer, the most important part of this entire turnaround narrative, is the pivot on the bottom line. The company successfully swung from a prior year of losses to reporting a positive operating income of $500,000.
Okay, so that $500,000 figure, it sounds small in absolute terms, but that shift from red to black is psychologically and financially massive. Can you elaborate on why that specific metric, positive operating income, is so critical to justifying a 41% move?
It's absolutely crucial. It signals a kind of viability and operational efficiency that the market had, frankly, questioned before.
Right.
When analysts talk about clean financial health, operating income is what they look at. It's often preferred over, less reliable metrics like adjusted EBITDA, which can hide a lot of necessary expenses.
So it's a more honest number.
It's proof that $500,000 profit isn't just a win. It is concrete proof that management has finally gained control over its core costs. It signals discipline. This is what unlocks the valuation potential. The market hadn't seen this consistently before, and that operational proof just removed a huge chunk of perceived risk.
So the proof of concept is there. Now, digging into that 14% revenue growth, was that spread out, or did one segment really do the heavy lifting?
The analysis points to one distinct area of strength, which is vital for understanding the quality of this revenue.
Okay.
It's their security segment, which operates under the name Vicon. This segment reported a massive 20% year-over-year growth.
Wow.
And the reason investors are cheering this growth in particular is the source. It was largely fueled by securing new, large government and institutional contracts.
That makes perfect sense. I mean, these aren't like seasonal retail sales. Government contracts just carry a different weight, don't they?
Exactly. These are high-quality, long-term revenue sources.
Wow.
Why? Because a government or institutional contract typically spans multiple years. It offers predictable revenue visibility that dramatically reduces market risk and provides a consistent base for the company's future.
So the market woke up.
The market woke up and it reacted to the realization that the company is doing two things at once: achieving double-digit, high-quality growth A&D, fixing its bottom line by becoming profitable.
So the whole narrative just shifted. As you said, it went from a struggling company hoping for a turnaround to a growing company that is now operationally sound.
That's the pivot.
Which brings us to the valuation. Because if the fundamentals are this strong, I have to ask, Why was the stock trading so low just a few days ago?
And here's where it gets really interesting. This is where the deep value argument in the analysis report truly begins to sing.
Okay.
We have to compare the company's size, its market capitalization, relative to its newly confirmed operational performance. Cemtrex currently has a market cap of roughly $20.6 million.
20.6 million. Okay.
Now you compare that slim $20.6 million market cap against the newly reported $76.5 million in solid annual revenue.
Wow. That is a profound disconnect between the price and the annual sales.
It is. I mean, if you calculate the ratio, that means the company is currently trading at approximately 0.27 times its sales.
0.27.
That shockingly low fraction is why the analysis uses the term value dislocation.
Let's just put that number in perspective for you, the listener, because 0.2 cyan sounds a little abstract. If you look across the tech and industrial sector, which is where Cemtrex primarily operates, a price-to-sales ratio of, say, 1 or 2 is considered standard, maybe even cheap.
Right.
So they are trading at literally 1/4 of the low-end industry standard.
That's the implication. And it forces us to confront an important question for balance. Why has the market ignored the business performance so completely for so long?
Yeah, why?
The answer, according to the analysis, is the history. The previous low valuation was a result of a massive risk premium placed on the stock due to years of turbulence, debt concerns, and just a lack of proven sustained management control over the profit and loss statement.
So traders were pricing in failure, not success.
That's it, exactly.
Yeah.
Stock was cheap because everyone thought the company was just going to keep losing money. The moment that profitability was confirmed, that risk premium started to evaporate and the valuation had to snap back. And the analysis report highlights that if the market were simply to reprice the stock to a conservative half-time sales, which, crucially, is still half the industry benchmark of one-time sales.
Still a big discount.
A huge discount. Even then, the stock price would need to nearly DOBL from the recent close of $2.98. That means the $5 to $6 range becomes fundamentally supported, not just speculative.
That is extremely compelling fundamental groundwork. So the 41% jump was really just the beginning of correcting a historical pricing error.
And it was spurred by that definitive proof of profitability. This is the very definition of a value dislocation, where the stock price just hasn't caught up to the operational business performance.
The market just needed that catalyst to force the correction.
Exactly.
So now that we understand the fundamentals and the deep value case, we have to look at the chart. If a stock jumps 41% in a day, there's enormous volatility and noise. So what does this all mean for the immediate trading strategy and, the technical roadmap ahead?
Well, we need to analyze the specific action of that parabolic day. The strong close at $2.98 was right up against the major psychological key level of $3, which is always important for momentum.
Right.
That signals buyers were not just taking quick profits. They were willing to hold positions overnight, betting on a follow-through.
Okay, so let's identify the critical support level, the floor. For you, the momentum trader, what needs to hold for this rally to stay intact and not just fizzle out?
According to the technical analysis in the report, the stock absolutely must hold above the 250 level.
$2.50.
That is the critical support established by the high volume during the breakout. If the stock retreats and holds above 250, the short-term uptrend is intact. This just looks like normal, healthy consolidation after a huge move.
And if it breaks 250?
If it breaks 250, it suggests that initial buying energy has stalled out.
Okay, and now for the ceiling. What are the barriers the stock needs to overcome to confirm that next major leg higher? We know it hit 338 yesterday, so that's the immediate challenge.
That's the immediate and most crucial hurdle. If the stock can break yesterday's high of 338 with similar heavy volume, the analysis identifies very little immediate resistance above it until we hit the next major area.
Which is?
The key resistance area after 338 is the $4 to $4.50 zone. And this is critical because it represents a gap fill zone.
Can you quickly define what a gap fill zone signifies for our listeners?
Certainly. In trading, a gap occurs when a stock opens way higher or lower than its previous close, and it leaves a sort of a void on the chart.
Yeah.
In this case, Cemtrex previously dropped very quickly through that $4 to $4.50 range because of bad news or panic selling. When a stock re-enters an old gap like that, the area often acts as a natural magnet, attracting traders and short sellers who are looking to cover. It becomes the next major target.
Excellent context. So what specific short-term pattern should listeners watch for right now to confirm that the momentum is building, rather than this being just a retail flash in the pan?
The analysis specifically talks about looking for the classic flag pattern. After such a dramatic vertical rise, it is perfectly normal and, frankly, healthy for the stock to consolidate.
Meaning it trades sideways for a bit?
It just trades mostly sideways, likely oscillating around that psychological $3 level for a few sessions. The key is the volume. If it consolidates sideways with decreasing volume, that is often interpreted as a sign of underlying strength.
Why is that?
It means the weak hands are shaking out, but the institutional buyers are holding their core positions. They're just, catching their breath before the next big push-up. That successful flag pattern would be the technical confirmation that the bull run is preparing for the jump toward that $4 level.
So if we pull all of this together, the fundamental pivot to profitability, the confirmed double-digit growth, the staggering 0.27 PS ratio signaling a massive dislocation, and the strong technical support established yesterday, it really changes the entire view on this stock, especially given its tumultuous history.
Absolutely. Cemtrex has been a brutal holding for a long, long time. For necessary context, the analysis report reminds us that the stock was trading at an astronomical 52-week high of $55 at one point.
55, wow.
It's been a long, painful descent from those heights. I mean, the market had completely written it off. But now, with a confirmed audited return to operating profit and that double-digit revenue growth in the Vicon segment, the fundamentals are finally fighting back.
The recovery is being driven by operational reality now.
That's it.
So the final verdict from the analysis report you're diving into is that this rally has legitimate legs. It's not merely a trading anomaly.
That is the core conclusion. The report believes this rally looks sustainable because it's rooted in real financial performance, which gives large institutions the confidence to step in.
And what's the key signal?
The report confirms that the critical technical point to watch for is a decisive break and hold above $3.40. That specific move would signal the market is accepting the new fundamental narrative and the next major bull run is underway.
With strong targets in that 4 to 450 range.
Exactly.
That's a powerful summary of why this specific stock is now generating headlines based on real results.
And if we connect this back to the bigger picture, this whole situation raises a fascinating question for you to consider. Given the massive drop from the previous high of $55, we've established there is a huge value dislocation at the current price.
Right. The question is not simply if the stock can hit $4, it's how far can a value correction like this take a stock once the market finally acknowledges that a return to sustained profitability is, well, a permanent fixture of the company's future. If the value dislocation is truly this massive, the distance between the floor that's been set and the eventual ceiling might just surprise everyone watching this recovery.